This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher today. This after the sharp declines yesterday. In fact, the pressure that we saw in yesterday's trade was the worst single day weakness since last November. A lot of the strength in this market appears to be linked to the housing starts report that did come in better than expected, although the more important number of the two that starts and permits is the permits figure, which actually showed a weaker number. Nevertheless, the headline number starts coming in better, and that helped futures. Also, we had comments from a Fed spokesman, Dudley, indicating that the Fed's quantitative easing program could be adjusted based on the pace of the economy, implying that there could be more QE if the economy were to weaken. Of course, we are seeing some short covering after those sharp declines yesterday. Our feeling is, though, that these gains will not follow through today. The dominant influence is now becoming a weakening global economy. There is additional evidence that the global economy is slowing, and I think it's going to be harder and harder for the effects of QE to counter that influence. Over in the currency market, seeing the euro currency, this after some actually negative numbers as far as investor sentiment in the eurozone. So it looks like some short covering in the euro currency in spite of some negative numbers there. Pressure on the yen. There's a growing belief that the Bank of Japan will continue their QE, maybe even ramp it up slightly if they could. We feel that the Japanese yen, after making a 3.5-year low against the US dollar, will probably test this level again and penetrate it in the next couple of weeks. Longer term, we still feel the dollar index will work higher. We are in a congestion pattern in the dollar index now. Ultimately, I think we will break out to the upside, and still thinking that the pound will work lower as well. But the weakest of all of these currencies is likely to be the Japanese yen. Credit markets, in the last month or so, seeing higher prices as the global economy is showing signs of slowing. We believe now that the trend over the next month or several months in the credit futures market will be to sideways to a little bit better. Today we are seeing a little pressure as stock index futures advance and commodity futures also working a little higher after such a terrible day that commodity prices had yesterday. Longer term, this is the very long term, I think that we should be using any flight to quality rallies as selling opportunities, but in the meantime, look for a sideways to higher trade in the credit futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
That's his favorite class. She was at the football game last night.